Hi, I am Ainura from Almaty, Kazakhstan. I am here to present what will be the Tesla price for 2023. First off, 3Q earnings beat expectations, but the company's regulatory credits were lower, costs were rising, and the currency was a headwind. Furthermore, there were inefficiencies with logistics and a plant ramp-up. Despite these issues, the company has $3.3 billion of free cash flow, nearly 3 times our estimate. It was a very strong quarter. Additionally, the FY23 consensus would allow more room for macro uncertainty. We believe factors that drove Tesla's weaker than expected 3Q production and deliveries could continue to present headwinds into 4Q as well as into FY23. We want to allow for greater margin for error in the supply chain, as well as incremental pressures from FX headwinds, inflation, startup costs and, to a lesser degree, demand destruction. Key changes to our model to reflect the 3Q delivery miss. Is Tesla experiencing demand destruction? Very likely, at the margin, although this would be reflected in shorter lead times and price declines in the months ahead, as even EV consumers may be feeling the effects of inflation fatigue by a strike. Nevertheless, we believe Tesla will still sell every vehicle it can produce through the FY23 forecast. Operating expense and capex leverage. Tesla total 3Q22 revenues grew 56% YoY while OPEX grew just 2% year-on-year. Capex declined 1% year-on-year. If one were to inflation adjust the YoY moves in capex and OPEX, Tesla's clearly doing more with less. We highlight the 2.1 gigawatt storage deployed in the quarter, up 62% year-on-year, which is the highest that has ever been achieved and solidly beating consensus. They also called out a production ramp at the 40 gigawatt Megapack factory in California. We believe this to be a solid win for Tesla, demonstrating continued strength and focus on the battery front. Will the price pump? Probably not in 2023. Price target cut to $350 versus $383 price target previously, with bull case trimmed to $500 and bear case to $150. We reiterate our overweight rating on Tesla and continue to position the name as a core holding. According to Morgan Stanley, we are still in a long-term bull case for Tesla. Total deliveries will be more than 3 billion soon. You Degans need to get in on Tesla now.